Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
The cryptocurrency market is always on edge when a major options expiry event approaches. Today, Bitcoin's 95K $105K range is under intense scrutiny as over $10 billion worth of monthly options contracts are due to settle. That's right, folks, we're talking about a staggering amount of money: 93,131 Bitcoin monthly options contracts, worth over $10 billion and on Deribit alone. Now, one options contract represents 1 BTC, so you can imagine the impact this will have on the market if these traders decide to cash in or out. But what's really interesting is the open interest distribution. We're seeing a large cluster of delta exposure at the $95,000, $100,000, and $105,000 strikes. This means that traders holding positions at these strikes have a significant net directional risk to Bitcoin's price. In other words, if Bitcoin breaks through these levels, we can expect a surge in sell orders from traders who are trying to lock in profits or hedge their losses. Conversely, if the price stays above these levels, we're likely to see a flood of buy orders from traders looking to take advantage of the rally. Now, let's talk about gamma. That's the measure of how sensitive options are to changes in Bitcoin's price. As we approach this expiry date, volatility is expected to increase, which will trigger widespread hedging by both investors and market makers. This can lead to a vicious cycle of buy and sell orders, driving prices even further away from where they started. Take Deribit's May 30 expiry for example. $2.8 billion in delta exposure is concentrated at the $100K, $105K, and $95K strikes. And according to Volmex, the largest decentralized crypto trading platform, we can expect aggressive dealer hedging and a fragile gamma environment. In simpler terms, this means that if Bitcoin makes any sudden moves, traders will be scrambling to hedge their bets, either buying or selling in an attempt to limit their losses. And with prices already at record highs above $111,000 the previous week, we're already seeing some pretty wild price action. But don't just take our word for it. According to Deribit's DVOL index, which represents the options-based 30-day implied or expected volatility, this rate is actually ticking slightly higher. That means a 24-hour price move of 2.37% isn't too far off. And what does all this mean for Bitcoin? Well, in short, we're going to see some wild price swings in the coming days and weeks. The market will be volatile, to say the least. And if you're not prepared, it could be a tough ride. That's why at Bitcoin Bulletin, we always advise our readers to stay informed and adapt their strategies accordingly. Whether you're a seasoned trader or just starting out, this is an event that demands attention. So, make sure you're following all the developments and staying on top of your game plan.